You know, every single day, billions upon billions of dollars in shares change hands on India's stock markets. It's this massive, high-speed digital dance. But behind this modern marvel, there are two completely different stories. One that grew organically, kind of like a tree, and another that was meticulously built, almost like a skyscraper. So let's dive into these two fascinating tales.
And this slide right here is the heart of our story. On one side, you've got the BSE, the Bombay Stock Exchange, kicking things off way back in 1875. It just grew, organically, from people literally chatting under a tree. And on the other side, the NSE, the National Stock Exchange, born in 1992. It wasn't organic at all. It was deliberately designed from scratch to be a modern, tech-first project. A banyan tree versus a blueprint. That's the perfect way to think about it.
So, to really get a grip on how today's market actually functions, we have to understand how these two totally different philosophies even came into being. It's a really cool story of how old-school history and brand-new technology kind of smashed together to create the system we all use today.
All right, so let's start by digging into the very DNA of these two institutions. I mean, their foundations could not be more different. And that single fact has pretty much shaped everything that came after.
Okay, now look at this slide. What's absolutely wild is the sheer gap in time. The BSE story begins back in the 1870s, with brokers literally meeting under a banyan tree on what would one day become Dalal Street. It gets formalized in 1875, making it Asia's oldest exchange. Now fast forward over 100 years, to 1992. The NSE is born not from a street corner, but from a government committee and a mission to build a modern, transparent, electronic-first market from the ground up.
And this quote, it just nails it. It perfectly captures the whole idea. One grew from the ground up, adapting and evolving over a century. The other was engineered for perfection right from the get-go. This one line just sums up the whole spirit of their differences.
And this difference goes all the way down to their founders. With the BSE, you kind of have this great man version of history, with key figures like Premchand Raichand leading the way. It was basically a club of brokers who decided to put some formal structure around what they were already doing. But the NSE? That was a group project. It was the result of committees, government recommendations, and a whole team of tech experts tasked with building the future. Top-down design versus bottom-up evolution.
Okay, so we have these two completely different histories. But how does that affect how trades actually happen today, right now? Let's peel back the curtain and look inside the high-tech heart of the modern market.
So at its core, what does a stock exchange even do? Well, it's basically a regulated marketplace that does four key things. 1. It accepts buy and sell orders. 2. It matches them up. 3. It publishes the prices for everyone to see. And 4, this is the really important part, it makes sure the shares and the money actually get to the right people after the deal is done.
And here's the crucial thing. Despite their totally different pasts, today, both the BSE and the NSE are these incredibly powerful screen-based markets. The old days of traders yelling in a big room? Gone. Now, when you place an order, a computer engine, like the NSE's NEAT system, matches it automatically. It's all based on the best price and who got their order in first. It's called price-time priority, and there's zero human guesswork involved.
But matching a buyer and a seller is only half the story. What happens after the trade is matched is what makes this entire system work. It's like the market's hidden safety net, its own special insurance policy.
I mean, think about it for a second. You've just agreed to buy shares from a total stranger who could be anywhere in the country. What's the guarantee that they'll actually give you the shares? And what guarantees that you'll pay up? What's stopping someone from just ghosting the deal?
This is where the real magic happens. The second a trade is matched, this special company called a clearing corporation, or CCP, jumps right into the middle of the deal. It legally becomes the buyer to every seller and the seller to every buyer. It absolutely guarantees, that the trade will be completed no matter what. And to protect itself, it takes a small security deposit called a margin from both people.
So, at the end of the day, the CCP is the market's ultimate insurance policy. If the person on the other side of your trade suddenly goes bankrupt or just vanishes, it doesn't matter. The CCP steps in and makes sure you get your shares or your money. This is the invisible engine that builds the trust that lets millions of strangers trade with each other every single day. It's huge.
Okay, so the trade is guaranteed. Awesome. Now, how do the actual shares and money move around? Let's follow the final steps of this journey, all the way from your trading screen right into your account.
First thing you need to know, there are no paper share certificates anymore. That's ancient history. Everything is electronic or dematerialized. Your shares are basically digital records that live in a special demat account, which is kind of like your own digital vault for stocks. And in India, these vaults are run by two main keepers, NSDO and CDSL.
And how fast does this all happen? Incredibly fast. India runs on something called a T+1 settlement cycle. The T stands for the trade date, so T+1 means that the money and the shares officially change hands just one business day after you click buy or sell. That efficiency makes it one of the fastest markets on the entire planet.
So here's the full behind-the-scenes checklist. You place an order. It gets matched on the exchange. The trade info goes to the CCP, which guarantees it and figures out who owes what. Then, on the very next business day, the CCP tells the depositories to move the shares and the banks to move the cash. And boom, you look at your demat account and it's updated. It's a beautifully choreographed digital ballet that happens millions of times a day.
Okay, so let's zoom back out. We've got these two major exchanges, born in totally different centuries with completely different philosophies. But today, they're both essential parts of a single, powerful, and deeply interconnected system.
And here's the whole cast of characters. You've got SEBI, the regulator, who makes the rules for everyone. You have the brokers and trading apps, they're the gateways. The BSE and NSE are the marketplaces. The CCPs are the guarantors. NSDL and CDSL are the digital vaults. The banks move the money. And finally, there are the end users, investors, like you and me. Everyone has a very specific and crucial role to play.
So to wrap it all up in a neat little bow, the BSE, with its organic, street corner roots and the famous Sensex index, carries this incredible legacy of history. The NSE, with its Nifty 50 index, was the great modernizer, built from day one on a foundation of technology and transparency. Just two very different roads that led to one incredibly dynamic market.
Seriously, the journey has been nothing short of incredible. I mean, from brokers haggling under a banyan tree to settling trades in a single day, and it's not even stopping there. India has now started to roll out optional same-day or T+0 settlement, which just makes you wonder, how fast can a market actually get? How close to instant can it become?